Tuesday, the 8th of October 2024. First critical price points. This is on the left is the weekly chart, on the right we have the daily chart. Today, not very specific points that lined up with it. As you can see, it's very disturbing, but this wick, the consequent encouragement of that is very important for later on, because this is the consequent. I didn't annotate it in here because if we zoom into the hourly chart, we can see minor buy side. This is also previous day's high and consequent encouragement of that weekly wick. So that was an important price point for me. We see a low, high, lower, low, higher, high. So this is the bullish breaker. It's a bearish breaker as annotated here, but it's actually a bullish breaker. And then the primary buy side that we're looking for after this to take out this and then go lower to then eventually my expectation for the week is to trade down in here, and one of those three averages have to make a has to fail to take this out to make a higher low. So then the entry model, we have the London session for a change. We have a low, high, lower, low, higher, high. We drop into the new day opening gap. We have a bearish breaker in here. This is the, I think, the 5-minute chart, 15-minute chart, whatever. And then we take out this low. We have a turtle soup. We inverse this. Now we go higher to potentially draw up to the previous day fair value gap, and to expect to inverse this new day opening gap. Then we have the AM session. We have the first percent fair value gap. Draw up, consolidate, liquidity run in here. Immediately rebalance. We draw up, lower, 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 smooth highs, and then we inverse this to try to trade up to the primary buy side liquidity. I knew that we weren't gonna tag the price side today, because I want to expect that to swing up tomorrow, because we kept getting high tomorrow, so today. So tomorrow we should have a big trap for all the retailers. So this is the price delivery. This is the Nasdaq. This is the S&P. We have price side liquidity being tagged, almost tagged today. We have major buy side liquidity that's tagged. And then we have other major buy side, the one above, that's not tagged in the EQ. But what is tagged is the primary sell side, and this is clean open at the Nasdaq. So now the Nasdaq compared to the Dow Jones, we already tagged the price side, primary buy side liquidity. We have major buy side in here, other major buy side resting in here. So because of the primary buy side and the primary sell side being tagged already, we don't need those three averages being in close correlation, because we can already see, okay, the primary buy side has already been tagged. The Dow usually is advanced compared to the other threes, and then the ES is usually slower on one side. So the ES is slower this time on the buy side than it is on the sell side. And after we tag this, we can see we go down to primary sell side. So an indication for us if we really are listening to that Dow being advanced and stuff. After primary buy side, what can we expect? Yes, primary sell side. So now the trade of today, well, the price delivery of today. This is the range opening gap high. This is the consequent encouragement of that, and then lower we have the opening range gap low. 17 handles range is a optimal range gap. We had 70.75 handle range opening gap, which is ideal for the first 30 minutes to trade lower and then trade up. Immediately I wanted to see that trading lower to take out the engineer sell side, but we don't trade to the 25% range of that. We just leave. That's okay, it leaves without me. And then in here we have the 50-minute this candle and this candle. After we take out minor buy side, we draw down to have an immediate rebalance, and we do close a little bit at this inverse fair value gap, but once we trade above it, I couldn't find an entry on the 1 minute chart, so it leaves without me once again. And here we had a reason to think that price might be going down after trading up to the new week opening gap, because the bodies are definitely respecting that, and I wanted to see this inverse, this here, and needed to inverse to then close higher in here, and then take out the engineered sell side and leave the primary buy side open. But it doesn't, it just trades up to the major buy side liquidity and previous day high, because we had an immediate rebalance in here. And then at the 10, 15, 11 macro, this for me was an indication that okay, now with this inefficiency in here, we can fill this up. I didn't really exactly know where to take partials, and I wanted to take partials at the midpoint of that, so the high of that new day week opening gap, and then I wanted to take a partial at the low of that gap, and then I wanted to take a partial at the low of this thing here. So we do that. I had my stop just above the inverse fair value gap. As you can see, I got tagged out. After I got tagged out, of course, the price rallied down, and then we came back up, rallied down again, came back up, leave this open, obviously, come up, trade back down again, then come up and trade back down again. I'm gonna check if there is a reason for me to believe that. Okay, yes. This high and this high, that's an SMT, because in the ES we had a lower price, we took that out and went higher. These are smooth on the ES, and they're also smooth on the, let's see if the Dow is smooth also. No, the Dow is just a somewhat of a high resistance liquidity run up. But remember that Dow was not even making an attempt to trade to the major buy side, but the ES is. So once we trade below the new day opening gap, we take out this low. We wait for 1:30 to 2 p.m. That's the opening, the range gap, the opening range of the PM session. We see what happened during the PM session. We see an inverse fair value gap in here. We trade back into that. The bodies are respecting that. Once we trade to the high of that, we see an immediate spike up. We leave relative equal highs, relative equal lows. We take that out. We turtle soup this again. Then we inverse somewhere in here, and then price doesn't come back all the way down, and it leaves without me. Today was they all left without me except for these two. I could have taken these two, and I could have taken something in here to turtle soup something in here with this fair value gap in here, this fair value gap in here, and then we turtle soup this. Once we turtle soup it, we can draw up higher. I should have put an arrow in here. Also, we trade above, we inverse this fair value, we fill this fair value gap up, the 50-minute fair value gap, and then we trade not even to the new week opening gap, and trade higher to leave primary buy side open to create relative equal highs, to take those relative equal highs out tomorrow, and then really trap the retail perspective for higher prices, because we went up all day. We didn't even take out engineered sell side. We didn't even trade it down to the midpoint of that opening range gap. High conviction of bullish conditions, which is strange when my weekly bias is bearish. So it's an ideal position tomorrow to position in short positions and have extremely high runs to take out all the motherfuckers that were long today. Alright, cut. That was the end of this thing, cut. Alright, cut. You take it easy, cut. Alright, cut.